Well, the Reserve Bank of New Zealand's followed the RBA's lead by holding rates today in what economists describe as a bit of a dovish hold. Now, that implies the cash rate could fall in the future if the economic conditions are right. Both the RBA and the RBNZ are expected to cut rates later this year. The RBA's case is next month in August. So for more on this, I'm joined by Peter Tulip, Chief Economist at the Centre for Independent Studies. Peter, thanks for your time.
Hi Ed, how are you?
Good. Look, obviously the market was expecting the RBNZ to hold interest rates today. That wasn't a surprise. But the big surprise was the Reserve Bank yesterday holding rates. I mean, what did you make of the RBA's decision?
So I agreed with the decision, but I also agree it was a surprise. Most people were expecting the bank to cut. I think the market was overly optimistic about reductions in rates. And in particular, I think the market has a more optimistic view on inflation than the Reserve Bank does. And that was clear in Michelle Bullock's press conference.
Yeah, she was on the defensive quite a bit in that press conference, and quite a few questions were about the communication from the central bank. I mean, do you think they communicated well over the course of this year?
No, I mean, it was obviously a big misunderstanding. Well, not a big misunderstanding, it was a small misunderstanding. You have to remember that a lot of the misunderstanding came because the market overreacted to the monthly CPI, which the Reserve Bank thinks is just too volatile to take much of a signal from. That was corrected within 2 weeks. So it's not a really big deal. And the Reserve Bank clearly can't give communication to the bank every day. They had to wait till the decision was made, that came, and it was corrected. So it was a mistake and it was a problem, but not a big one.
Look, I've only been in finance for about a decade, but when there's a 99% odd chance for a rate cut and it doesn't happen, I haven't seen that before.
Sure. So no, it was clearly a surprise and clearly a misunderstanding, but it only lasted for a few weeks, so not a big one.
The other interesting thing was publishing the unattributed votes from
Yes.
the RBA's Monetary Policy Board of 9 people, and there clearly was a split. Some people did think the RBA should have cut rates.
So this is a big change for the RBA to document and publish its votes, even if it doesn't give names the way other central banks do. And I think this removes some of the misunderstanding that arose from the May meeting. Part of the misunderstanding was Michelle Bullock said, well, we were thinking about 25 basis points. We also thought about 50 basis points. And so the market interpreted that as maybe they could have gone much stronger. In fact, that was a misunderstanding, as we learnt now. And now we know much more clearly and precisely where the balance of views on the board is.
It was interesting watching the stock market reaction yesterday because it fell at 2:30, but as Governor Bullock spoke, it slowly creeped back up higher and higher because reading into her comments, it seems like the trajectory of rates in Australia is still down. Rates are still going to fall. Is that a way of providing forward guidance? Something that the RBA said it was not going to do again?
They've been saying, I think, inconsistent things on that very point. So it's understandable. People are confused. But the message definitely from the press conference was that the bank is expecting gradual, cautious reductions in interest rates. So the initial reaction may have been to think that the bank was taking a dovish turn, possibly with its new members. That was corrected a few hours later in the press conference.
I mean, the big issues were productivity that Governor Bullock flagged, and I think building costs were still high. I mean, what's your sense of how our economy's going right now?
So they were two of the reasons, I think, that the monthly CPI was the bank's translation of the monthly CPI into the quarterly numbers. Those factors in particular suggest that the June quarter CPI may actually be a bit higher than the bank was forecasting. So that's a small upwards correction to the outlook and the inflation outlook. Where the economy is going, we're in a pretty good state. I mean, unemployment is low and forecast to remain close to its current levels. Inflation has been in the band as of the last quarter, and the outlook is that it will be in the band in a year or two's time. So overall, the macroeconomic conditions in Australia are pretty good, and the Reserve Bank has a right to some self-congratulation, I think.
Yeah, look, it seems like they've done a pretty good job. But Are you surprised by consumer spending not picking up as much as anticipated after the 2 rate cuts that we've had? People seem to still be saving money.
Yeah, There are lots of pluses and minuses in the outlook. That's one of them. There are others on the other side. Overall, yeah, GDP is a bit weak. Productivity is weak. They're two of the big concerns, and there's a summit to address that in August. But the numbers that the Reserve Bank really focuses on, which are inflation and unemployment, the outlook for them is very close to their targets. So they're good signs.
Peter Tulip, Chief Economist, Centre for Independent Studies and former RBA employee. Great to have you on the show.
Thanks, Ed.